Hi, this is PR Sundar and welcome to my YouTube channel. And today I am going to talk about a new exciting product being introduced by NSE. First, let me give you some historical background. FIIs, Foreign Institutional Investors, and now technically they are known as Foreign Portfolio Investors. They are one of the largest investors in India, and markets usually go up when they buy and usually go down when they sell, and that's a different thing. But if you look at which sector they have invested the most, a study says that 35% of their money has been parked in financial sectors. In fact, that is their total money. But incrementally, the money keep flowing into Indian stock markets. 48% of the new money coming to India, so they are going into financials. That is almost 50%. So 50% of the money that is coming to India from FPIs are going into financial services sector. Now you should know what I am going to talk. The NSE is introducing a new contract called financials into futures and options segment. Why this is an exciting product? Let us look. Though there are futures and options available in few indices, Nifty and Bank Nifty are the two most popular. There is an IT index also, absolutely very negligible liquidity. In fact, nearly 90% of the volume is being traded in Nifty and Bank Nifty, futures and options only. I'm sure you all know what is beta. The Nifty beta is 1, whereas the Bank Nifty beta is about 1.36. So that makes Bank Nifty high volatile, and Nifty is low risk and low reward, and Bank Nifty is high risk, high reward. And that is because the Bank Nifty has only 12 components, whereas the Nifty has 50 components, and the Bank Nifty has 12 components and all 12 of them belong to the banking sector, whereas the 50 components belonging to different sectors. So generally people feel that Nifty is a low risk and Bank Nifty is a high risk. Is there any product that can be in between these two? Not as low risk as Nifty, not as high risk as Bank Nifty. That is where exactly this Nifty financials come into the picture. Nifty financials basically consists of 20 stocks, and I'm going to show which are those 20 stocks. And here you can see, if you want to see the stocks, what you can do, you go to nseindia.com and you click on this button and you click on sectoral indices, and you can see Nifty Financial Services. You click, and yesterday out of the 20 stocks, 14 stocks were up, 6 stocks were down. You will click on this stock watch and you will get all the 20 stocks. This is REC, PFC, Mahindra & Mahindra Financial, ICICI Bank, ICICI General Insurance, State Bank of India, Cholamandalam Finance, Bajaj Finance, Kotak Bank, HDFC Life, Bajaj Holding, HDFC, ICICI Prudential Life Insurance, HDFC Asset Management, HDFC Bank, Bajaj Financial Services, Shriram Transport Finance, SBI Life, PEL, Primal Enterprises, and Axis Bank. So if you see basically, so this consists of few banks and few insurance companies, few NBFCs. So this is called Nifty financial sector. So because the beta of Nifty is 1, Bank Nifty beta is 1.36, whereas Nifty financials, the beta is 1.2. It has 94% correlation with Nifty and 98% correlation with Bank Nifty. So if I put it in simple words, Nifty is low risk, low reward. Bank Nifty is high risk, high reward. Financials is medium risk and medium reward. And right now it is trading around 14,500. Now, let us look at the details of the contract specification. So this circular I downloaded from NSE site. The symbol is financials and contract is 40. Bank Nifty contract size is 25. Nifty contract size is 75. But whereas this contract size is only 40. So because it is trading around 14,000, so 40 into 14,000 works out to be contract size to be around 5.5, 5.6 lakh. It is much less than Bank Nifty and Nifty contract size. So therefore, the required margin money will also be less. And trading cycle, so as usual, 3 monthly contracts plus 7 weekly contracts. And expiry day is as usual last Thursday. And strike will be 1 strike at the money plus 30 strike out of the money and plus 30 strike in the money. So this is quite similar to Bank Nifty. And strike interval is 100. So Nifty strike interval is 50, whereas Bank Nifty as well as financials strike interval will be only 100. And the rest of the things is the same as Bank Nifty. Option type, European call option, European put option, cash settled, right? Daily settlement and all those things are the same thing. And the freeze quantity is more important, is 5,001, which means at any one point of time, you cannot place order for more than 5,000 quantity. And price band is a 10% circuit limit and spread contracts. So they are going to start this a new contract from 11th of January 2021. I hope people will show more interest, and this product I'm expecting to be having a good liquidity and good volume going forward. Thank you for watching.